Hello and welcome to another update video about EdgeX. So yeah, EdgeX is in a very short-term uptrend. It's a bit like Fetch AI, which I talked about yesterday. Obviously we talked recently about EdgeX as well. So we said that it possibly has done here a fourth wave, but I don't see any strong signals for that. So it could have done a fourth wave here at 33 cents, but then this was really the maximum it should do really in a fourth wave. Yeah, it came down to basically the 50% retracement here at 35 cents, and really based on that it needs to turn around if it wants to put in this fifth wave from here. Target for the fifth wave is either 73 or 97 cents, depending on if we put an extension in or not. So if we rally higher, I would pay close attention to the 73 cent level first, and then 97 cent if we go above that significantly. But it really needs to have the wave 4 in to have this count valid. If it breaks below the 50% retracement, which was here 35 cents, then we probably have either something more bearish or a 1-2 setup, which would be my first view then. Because if we have a 1-2 1-2, it could escalate much higher afterwards. It would just mean that we probably get one more low before, so that we make basically a low maybe in the 20 cent area here, as highlighted on the micro count here. A wave, B wave, C wave, and then we would probably have a wave 2 here if we break below that low from the 13th of February at 33.5 cents. Both are possible. If you ask me, I think the move down, we definitely need to consider it strongly, that we get one more leg down here. The reason is the move up was impulsive, the move down was impulsive. The move up now is corrective. That normally suggests that we get one more leg down in possibly an impulse or a C wave at least. Could be a diagonal, but impulse down, correction up, impulse down, and we have 3 waves up now already. Yeah, and we have reacted to the 61.8% retracement at 54 cents. Yeah, I gave you that resistance area in the last video, something to focus on. And we expect headwinds in this area. Of course, a breakout above that area is possible. It just means a lot of effort. If we break above resistance, then we have a greater chance of getting the direct breakout in a fifth wave. This is B wave resistance, yeah? So I measure the length of the A wave to the downside, and you would expect the B wave not to go above the 78.6 retracement. It can do, but only again in rare circumstances in this situation here, in such a count. So that means that a break above that level, above 60 cents, would increase the odds of a direct breakout to 73 cents or even 97 in a more bullish context and bullish scenario. However, as you can see clearly, we have only moved up in 3 waves, and we have overlaps in there as well. So it really looks corrective, this move to the upside. We have been rejected directly from the 61.8 retracement. So it, you know, so I'm still in favor of another leg down. However, would be happy to change my view above 60 cents. But now, I mean, this strong rejection and then these overlaps here, they just don't lend themselves to interpreting it as a clear impulse, unless it was really doing something like here a 1-2 setup, But the problem is that you've got here a 3-wave move. I mean, yeah, it looks corrective. It looks like a 3-wave move to the upside here as well. Yeah, with these overlaps here. I mean, you can count 5 waves, but it's overlap, so it is a corrective structure. What you could say, to make it simple, is you have to expect headwinds in this area. A breakout above the 60 cent level, we can expect it to go to 73 cents. Now it needs to sustain, so ideally retesting and so on. And as long as it's following the trend channel here, you can follow it and it goes higher, yeah. But be aware, when it breaks below the 20-day moving average, which is here the white line around 42.5 cents, and breaks out of the ascending trend channel, then I think we need to be on the lookout for the C wave starting. Until then, we could be, let's say, focused on the upside in the very short term, yeah, against as long as the trend line of the trend channel is holding. But when it breaks, be aware that the C wave could be starting. And then, yeah, what would be targets for that? So based on the latest high that was made, you could look at target 35.2 cents, but that's the less common one, or 22.4 would be what I would prefer then. Okay, that's my update about EdgeX. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.